Assalamualaikum and hi everyone. Today my group members and I are going to talk about the current initiatives in environmental related management accounting. For the content of this seminar, we will start off by the member introduction and then we will discuss the current initiative in environmental related management, which we divided into two sections, financial and non-financial initiatives. Our team consists of 5 members, which are me, myself, Siti Noizati, and followed by Siti Nur Aina Fatihah, Nur Adilina Adriana, Amira Nabiha, and Nur Aina Mardia. Firstly, for financial initiative, I will start with the input-output analysis. Input-output analysis is a technique where the inputs and outputs are recorded on the principle that what goes in must come out. This technique highlights the existence and size of the environmental cost. The objective of this analysis is to identify both physical quantities and monetary terms of the output, which then forces the company to focus on the environmental cost. So, to implement this analysis, first, the company needs to measure the physical quantities of input and output. The idea here is that all raw materials and other inputs to a process must be traced to outputs, regardless whether they result in a finished goods, scrap item, wastage, or others. Then, based on the records, the management needs to identify the environmental impact or gap. It is assumed that any unexplained gap is likely to imply environmental impact. Thus, any waste or pollution can be tracked on both a physical and a cost basis. And the last step would be reducing the identified impact. To understand more on the input-output analysis, let us see the following illustration. So let's say that there are 100 kilograms of raw materials used in the production process, and at the end, there are 80 kilograms of finished goods. So, the remaining 20 kilograms loss must be taken into account in some way. For example, maybe 5 kilograms of the material has been sold as scrap and the remaining 15 kilograms has been classified as wastage. In this way, the environmental cost can be identified, thus forcing the company to focus on reducing the environmental impact. So that's all from me. Now I will pass to the next presenter, Siti Nur Aina Fatihah, for further discussion. Thank you.
Thank you, Izati, for the explanation. Hello, I'm Aina Fatihah. Let me continue the seminar on another technique, which is flow cost accounting. This technique uses not only material flows, but also organizational structure. It is similar to input-output analysis. It is to measure and minimize the cost and the impact of packaging. It reduces business total cost in the long run. It divides the material flows into 3 categories, which are material, system and delivery, and disposal. For material, it is purchased then continues to the production system and delivery, and lastly, disposal of waste. The values and costs of each 3 flows are then calculated. Flow cost accounting aims to reduce the quantity of material at each stage. It also reduces the company's carbon footprint, which will give a positive impact to the environment. Besides, it reduces the company's costs over the long term. Flow cost accounting highlights material flows by examining the physical quantities involved, the cost under value, and each stage of the organization. It makes material flows transparent by looking at these 3. To sum up, material flow cost accounting, on the other hand, considers all costs that were incurred in the process chain before material input becomes a material loss. There are hidden costs such as transport, machine use, energy, as well as operating material. I will pass the microphone to Adlina for further discussion on other environmental management accounting techniques.
Thank you, Aina Fatiha, for the explanation. Hi, my name is Arlina and I'm going to explain about the next financial initiative, which is Environmental Activity-Based Costing. So let's learn about what is EABC. ABC will allocate the internal cost to the cost center and cost driver on the basis of the activity, and it will give rise to the cost. In an environmental accounting context, it distinguishes between the environment-related costs, which can be attributed to the cost center, and environment-driven costs, which tend to be hidden on the general overhead. The definition of the ABC is the costing method that assign environmental overhead and indirect cost to their related product and services. The purpose of conducting ABC is to use in allocating the corporate environmental cost. The benefit of the ABC is there are many benefits, but one of it is an accurate method of costing of the product and services according to their cost driver. It will increase the understanding of the user about the overhead and indirect costs. Environmental cost calculation is the first step when determining environmental costs incurred by any company. The recognition criteria of the environmental costs include the first one is relationship. The company need to analyze whether the operation occurrence are related to the environment or not. The second one is principle. They need to analyze whether they are compliance with the principle of definability, measurability, relevance, and reliability. The third one is period. Then they need to determine the belonging period of the cost effectiveness. Allocation step need to be done by the company when doing the ABC. The first step is analyze the environmental cost of the event by determining the activity. The second one is environmental costs are assigned to each operation to form the different libraries. The third one is determine the environmental cost of drivers. Environmental cost driver are the decisive factor which lead to environmental cost to occur. The fourth one is the allocation calculation of cost driver of the cost operation library. The fifth one, which is the last one, is cost of operating cost of library dates to the product. That's all from me. I will pass it to the next person. Thank you for listening.
Thank you, Na'anina. Next, we will move on to environmental life cycle costing. Firstly, I will talk about LCC, which is life cycle costing, where it considers all the costs that will incur during the whole life cycle of the product, work, or service. An example of this cost is purchase price and all associated costs, which is delivery and installation costs, operating costs, which includes fuel, water use, and maintenance expense, and lastly, end-of-life costs, which includes decommissioning and disposal costs. For ELCC is not meant to be treated as an independent technique, but it can be seen as a supplement to LCC's analysis. ELCC introduces environmental costs into the aspect of analysis. An example of this environmental costs are cost of disposal, which is the cost that is incurred by the company to manage their waste disposal. Ecological tax, or also known as eco-tax, where it is imposed on activities that are harmful to the environment, and eco-tax is intended to promote environmentally friendly activities via economic incentives. And emission control expenses are expenses that companies will incur to control their gas emission. And lastly, ecological products commercial cost, which is the cost that is connected with the actual or potential deterioration of natural habitats due to the economic activities. And ELCC cost is different from LCC's methods because LCC includes not only the environmental impacts but also the costs. And it also analyzes the cost from a consumer perspective, especially the cost to dispose waste. Purpose of ELCC is it can help to make purchasing decisions. It can also help to address direct and indirect costs in the total cost of products, where indirect cost is the external cost that has potential to increase in the future, such as disposal costs. It also is able to determine the total cost to reduce, because by using ELCC, we can see which cost reduction efforts would be more effective for the company to use, as the best alternative will incur less cost in the long run for the company to apply. ELCC can be calculated by adding all of the introductory investment costs, installation costs, energy, operation, maintenance and repair costs, as well as the exploitation interval and production loss costs, environmental costs, and disposal, reprocessing, reclaim cost. That's all from me. For the non-financial initiatives, I will pass it to Nur Aina Mardia. Thank you.
Okay, thank you Amira. Now I will proceed to the non-financial initiative. The first initiative is Environmental Performance Evaluation. EPE is the internal management process that provides information to facilitate the management decision on environmental performance. And the objective of the EPE is where it gives better understanding about the impacts on environment and also provide basis for benchmarking performance. And the second objective is EPE helps in identify opportunities in improving the efficiency or performance evaluation. Okay, now I will proceed to the steps in implementing the EPE in management decision. Okay, the first step is plan. We must select any of the indicators and planning on the environment performance criteria, and we can take it into account for overall scope of the activities. And the second step is do and assess performance. This is where we can collect data on a regular basis and we can convert it into the information. And the last step is check and act, so that we can know the possibilities of actions that need to be taken. And the next one is the indicators in the EPE. Okay, the first one is MPI. Management performance is provide information on management efforts to influence the organization performance. And the next one is OPI. Operation performance is provide information on environmental performance of organization operations. And the last one is ECI. Environmental condition is specific expression that provide information on global condition by the quality on the environment. Okay, now I will proceed to the second initiative, which is environmental supply chain management. It is on management of all significant environmental impacts from company supply chain throughout the life cycle of product or services. And the first initiative to reduce it by engagement with the supplier. Other than that, by environmental legal compliance, and the last one is by continuing to improving the environment. Okay, next I will present the implementation of environmental supply chain management is by through the use of eco-labeling. Eco-labeling is certified and practiced around the world, and it can help in identify and provide the verification on the environmental friendly product. There are two ways in promoting the eco-labeling. The first one is by encouraging the suppliers to get their own product eco-label, and the second one is inviting suppliers to be part of eco-labeling product. It can contribute with some selected components to this eco-labeling product. So that's all from us about the current initiative in environmental. Thank you.